And we are live on all platforms. This is Deal Flow Live, ladies and gentlemen. Welcome back to the show. Today, like every other day, we are going to be going over businesses that are listed for sale online. I've got Grant Barnes here, our special guest. And of course, I have my host, Ryan Santo, and I'm your other host, Brody Vincent. Thanks for tuning in. And if you're watching, we're going to be talking about retail businesses that are listed for sale online to be able to be bought in our home state here of Florida. We're going to be talking about retail businesses because Grant actually has a specialty in retail, came up in retail, now owns a chain of stores in the retail space.
Yep.
He's going to be telling us a little bit about that, about his background. Then we're going to get into analyzing some of these deals, which, as you can see here, we've got some of them pulled up here on Biz Buy Sell. We're going to get into the meat of it. We're going to be talking about whether these are accurately priced businesses, whether we would be interested in owning something like this, and if not, who it might be a good fit for. Grant, would you start us off with just a little introduction to yourself?
Sure.
And what you're thinking about in the retail space at the moment and how you came up in it?
Yeah, sure. My name's Grant Barnes. I've been in the retail space now for, maybe 12 years, 12 going on 13. I started around 17, 18 years old working in specialty retail and kiosks. I was the guy in the middle of the mall that then kind of harassed you as you guys were walking through, probably not you specifically, but like your mom or your dad or something. Like, excuse me, miss, can I show you something? Did that for a long time. Grew a good number of, definitely need this today. Grew a good number of those businesses up and then switched into like more traditional stores afterwards. The stores now, we do like an alternative health and wellness concept. So it's like a mix of retail and entertainment put together, call it retailtainment, which I think a lot of shopping malls and, facilities like this have been looking for anyways. I think retail has changed a dramatic amount since I've been in business. So like when I first got started was kind of the rise of e-commerce. So you saw people starting to buy online, but it wasn't really the tool that it is today. And now fast forward, a decade later, if you're not in e-commerce, you're dying, right? And a lot of the brick and mortar businesses that I grew up with are no longer here. And then there's been a good number of them that have sort of transitioned into something else. So it's been a lot of fun getting to know the retail space and developing in it. I do feel like having worked in a lot of big tourist areas also with this concept between Las Vegas and Orlando, I get to see what's trending and what's popular in the industry and also who's keeping up and who's going to survive, I think. I've also been privy to a lot of conversations with higher ups in the field. I worked for a little bit with some executives over at Simon, which, Simon's the biggest mall property group in America. So I've had a great pleasure of talking to their vice president of leasing. I've worked with some of their smaller leasing groups as well on the local ground floor. So I've got to see sort of from their perspective as landlords and real estate owners, what they want to see and what they think is going to survive in the industry also. So really excited to be a part of the call. I'm normally on giving you guys a bunch of shit while you're trying to do it. So hopefully today you guys can give it back to me. So
Awesome. Well, we're excited to get into it. And for those of you who follow with the fund, Grant also is part of the private equity fund that I post about all the time. So he'll have some insights coming from the mind of that deal maker, business acquisition expert. And another thing that's really key is that Grant got his start with this chain of retail stores that he has now through an acquisition.
Yep.
Could we talk a little bit about that before we get into these?
Yeah, sure. Right. So the initial thing that I did was selling specialty retail products. So they were like muscle stimulators, pain relief packages, hot and cold wraps, things like that. And my partner and I were working really with a lot of distributors who were wholesaling the products as well. So people who were selling at kiosks or at trade shows. It's more his arm than mine. I worked mostly in the operations side. But we had an opportunity that came up about 2 or 3 years ago, maybe even more now, maybe 4 years ago, where one of the biggest clients that we had was looking to either close the business or sell. And so my partner was very smart about looking for a way for us to acquire that. Number one, to maintain the business relationship and keep selling products. But number two, we were privy to what had been happening with the business since they were one of our clients. So we saw the amount of volume they were pushing forward. And we're like, all right, something about this business is working and it's making sense. Plus, it is in a very popular area in Las Vegas on the Strip. And it was not an easy deal to figure out. I'll say it like that. And it was the largest acquisition I had ever been a part of. So it was a lot of work figuring out the nuts and bolts of like how we're going to make it actually happen on the acquisition side. But I was also in sort of the trenches and learned firsthand all the things that happen after the acquisition. Because I think, you and I talk a lot about acquisition and just like looking for businesses to buy and what's the right company. I don't think a lot of people understand or maybe have had experience with what it takes to take the business from the point that you bought it and actually make it successful or continue keeping it successful. And I've learned firsthand a lot of ways that things can go right and can go wrong through that process. But yeah, I mean, the business that we have now that's scaled out between these two big locales is from acquisition. And I'm a firm believer now, especially having done this process, that I don't think I would ever open a business again. I don't think I'd ever start a business unless it was like a passion project, something like I wanted to be doing. But I think to do a business, to want to have something be successful, why wouldn't you go after something that's already been working, And that sort of it's been an eye opener for me through this process with this company. And I think it's something I would continue doing moving forward. I can't see myself starting from scratch ever again. I mean, maybe you guys, you're young, but at my age, it's a little bit different. And that speaks for anybody over 30. I think you have a little bit more responsibility and you have a little bit more fear of losing something. I think when you're in your 20s, you're just kind of like, fuck it, I'll do it. Let's just see what happens. And the worst thing that can happen is you're back in the position you were when you started,
Well, having been involved in both ways,
yeah.
I think it's just the wisdom in you speaking.
Sure.
I mean, I see those, I'll zoom in a little bit. I see those gray hairs on that beard. I think those gray hairs are trying to tell us something, which is that
no more opening businesses.
It's an easier, streamlined thing to just go with something that has worked in the past. So for the audience, what year was it that you finished that acquisition? Just so we know.
Yeah. Oh, yeah. We finished right before COVID. So that was also a huge learning curve because we had finished the acquisition, I think, in the middle of 2019, maybe like second quarter. And we got everything rolling. Things were doing great, and something that you and I talk a lot about, which is buying businesses that have, professional management teams. It had the team. And I wasn't looking. I don't think we knew enough at the time to know that was important when we bought it. Now, of course, I would never do a business without it. But it had all the pieces in play. We finished the acquisition. Things are going great. Then COVID happens. So it's like February, 2020. And then you lose the entire professional management team also. That was a big learning curve for us. There was a big just curveball. You had no idea what to expect. You lost, your inventory person. You lost your staffing agency. You lost everyone. They just sort of disappeared overnight. So it was also like, how do we keep the business operating now? And then also this huge acquisition we just made. Now we have to figure out all these moving pieces of who's going to do what afterwards, because we weren't expecting to lose these people. But it ended up presenting a great opportunity for us for growth. And I think a lot of people who own businesses in 2020, I have to be careful to say this because I know a lot of people lost their ass too. And I know tons of people who really got screwed over by it. So there was an even split in my mind of people who saw it as an opportunity and used it to grow and to take places they wouldn't have had access to before. And then there was obviously another group of people who were super over leveraged and there was nothing you could do about it. It just shut down. But for us, it presented a really unique opportunity because the SBA was throwing money like left and right. I know you guys talk a lot about SBA financing on here and how that can be a great tool to acquire businesses. For us, it was a tool also to leverage for growth. And then because we're in brick and mortar, we had so many locations that we wouldn't have access to prior. The companies just had 10, 15, 20-year long leases and you were never getting in. That suddenly they can't afford to pay the rent. They can't find employees. So they had to close stores, which for small guys like us, let us kind of sneak in and ride the wave. So COVID was a crazy experience and it presented a lot of opportunity for growth. A lot of good things happened. We also learned a ton of lessons about growing fast, which is something probably I'm sure we'll talk about today if we're talking about retail stores. So yeah, that was the biggest acquisition to date in the middle of COVID. So you can imagine how that went.
And it's 5 years later and you guys made it.
We're still here.
Still in business.
We're still here.
It.
Yeah.
So, I mean, it can be done.
It can.
And
blood, sweat, and tears and gray hairs.
Yeah. This is someone, while he does have these gray hairs to prove the stress and the difficulty of it. This is someone, for anyone who's listening or watching, this is someone who acquired a business, an existing business with SBA financing, Small Business Administration financing, and now has been running it for over 5 years successfully, has expanded it and grown it, and has even grown other businesses on the side of it with your trade show businesses.
Yes, sure.
It's a whole nother conversation, but he's grown other businesses on the side of it, all through just focusing on this acquisition of this existing business. So it is possible, ladies and gentlemen, and we're going to take a look at some businesses for sale right now that would be in consideration that are in the retail space, and just see what Grant thinks of them.
Yeah.
How he looks at them through the lens of the experience he just shared. So as I get into that and get this screen open, we've got a few different options here. I'm going to switch my screen around on here too. So we've got a $5 million business here. We've got a $1.5 million liquor store. We've got a local sporting goods store. Anything jumping out to you that looks interesting, Grant?
I mean, I think we got to start with the most expensive one. I need to know, what are we doing for $5 million?
Apparently nothing, according to those numbers.
Yeah, I mean, no gross revenue, no
There's
EBITDA,
not a lot to look at here, to be honest.
no cash flow. Yeah, what are we supposed to go off of?
This is kind of crazy, actually.
They will seller finance, so
That's great news. I mean, that'll come in handy.
$5 million for $500,000 in inventory. Sounds like a fair deal.
Good 10x.
Yeah.
wrong 10x.
There are 3 retail apparel and accessory stores, one of which is a branded apparel store located. Wait, go up. Oh no, it's in the description. Sorry.
You might have to look at a different one because it's a little tough to do. Ladies and gentlemen, the reason I'm saying that is because it's very difficult to do an analysis on a business when you're supposed to value them based on the profit that they're doing every year, and this quotes no kind of profit whatsoever.
That's
a little bit of a challenge.
The only thing that I would give them is it's in 30A. So if you know where 30A is,
it is a really nice area.
Any Florida folks? No,
it's over on the Panhandle.
Yeah,
it's like near Destin. Right?
Yeah. So my brother-in-law and my sister, their family travels to this area every single year for vacation. And the last couple of years, we've had the privilege of going out with them and spending some time. And it is a beautiful area. It's ridiculously expensive. It's the type of place you vacation when you just have like stupid money. So, I mean, the fact that it's there and it's already established does make it kind of interesting. The fact that I don't know what it is, it does say it's offered with the royalty-free right to use the brand. So if you wanted to continue to grow it, legal entity separate from the stores, controlled by the store's owner. It's interesting because branded apparel screams to me that it's somebody big, like a name that they don't want to post because of NDAs or things like that.
That makes a lot of sense.
Unless you guys see something I don't, but that's what that screams to me. When I see somebody that's like branded retail, like you have the opportunity to spread the name across other locations if you want. I don't know if it's $5 million, but it'd be at least worth a message like, hey, could you tell me? I mean, why would they not put the numbers? That's my question.
It is bizarre. I'm going to go ahead and call an audible here. I think we should look at a different one. It's just hard to do. Ryan and I usually skip these types of businesses.
Okay.
You know, if you're someone who's looking for a business, I wouldn't necessarily say always skip ones like that because there might be something good there. And
Sure.
There's probably going to be less people considering it because of that.
Yeah.
The reason we skip ones like that are because the whole point of the show is to do deal analysis.
Sure.
And it's a little tough to go off of much of that.
I'm just saying, Dennis Hobbs, talk to your client and get those numbers.
Dennis Hobbs.
Yeah, Dennis, I don't know if you're going to have an easy time solving.
Fountainhead Firm, we know who you are.
Anything else catching your
What's
eye?
this? I like this value add near Disney with flexible zoning. If we can get numbers on that,
Let's look.
because this one's got the real estate included.
Hey, Brody, what's the Panhandle?
The Panhandle
Yeah, what is that?
of Florida.
What's that?
We'll talk about it later.
Okay.
How long you been here for?
Like only two years, man. Like, what's the city near it?
Oh, okay. No,
All
it's
right,
just like
so
a
we got-
region. Like,
Okay.
yeah.
We've got a
Panhandle.
Kissimmee, Florida.
Oh, that's so dumb.
It's Florida, bro.
Okay, yeah, fair enough.
Ryan is from New Jersey, so he's going off on a whole.
Yeah, like you got
different
room to talk,
tangent
bro.
on
Jersey
Florida.
shouldn't even be a state. All right, it's New York adjacent. That's what they need to call it.
Yeah, we saw an
You
opportunity
guys
for
are
money.
taking this thing off the rails.
sorry, I'm sorry.
All right.
All right.
So let's look at what this value add near Disney with flexible zoning is. And for those who are not involved in the retail space, when they say zoning, what do they mean, Grant?
Yeah, so normally it's like there's the state typically will zone a region for some type of business. Some states it's more broad and it's just like commercial, whatever, or it'll be just like retail, whatever. They don't normally get super specific, but it seems like with this you'll have the ability for you to do different types of services or products in the same area, which is an advantage, especially if you're looking at it from a retail perspective of wanting to own the property, which is not always an opportunity that presents itself in busier areas like Orlando. So the fact that this is Kissimmee, Orlando, and they're talking about you're getting the real estate and you have the ability to put these tenants in, it presents a really interesting opportunity, because if you had a retail brand and you wanted to lease the space to yourself, you could really take a flyer on it, take a risk, because you would be able to rent out the other buildings there and other spaces, lease those things out and see how it goes, which is not always the case. Most times in retail, especially in what I do, you're at the mercy of finding a place that has good foot traffic, and those people are never selling real estate. So this is really interesting to me.
Yeah, and I think that begs a great point. Like this drastically increases the types of people that this would appeal to.
Yes.
The
It's
types
also
of
an
buyers it would
auction.
appeal to.
Is it on
Yeah.
auction?
It says it's on
Starting bid.
auction. Oh yeah, bidding starts. I've actually never seen this on here before. Bidding starts in 33 days. Online auction November 18th. Grant is like adding that to his calendar right
I'm
now.
about to. Where's my
Oh.
phone?
Because we're in Orlando, so this is actually right around the corner from us, which is cool. Let's dig into this a little bit more. Starting bid $650,000. It looks like this is mostly just the real estate, so it's not really a business attached.
Oh, they're
to-
telling you exactly where it is too.
I mean, if you're gonna bid it, you're gonna auction it off, I sort of have to know where
Earl
I'm
of Bronson
going.
on Kissimmee. I think that's one of the areas. Isn't that near the corridor that's getting renovated?
That's a nice place, actually.
Yeah.
Smoky Bones Casino. Oh, I know exactly where this is. The only thing is that turn, you kind of get in no man's land. Like people aren't really looking towards the left too much there. You can see it's like trapped between two hotels. So you have
That
the
is a
Sun
little
End and the
creepy.
Lakeside hotel. So I mean, you've got something there.
Would you say it's good for the people who are staying at those resorts to kind of be walking over and grabbing food and maybe doing a little bit of shopping?
It depends on your use, but yes, I would say like a convenience store or like tourist trap type stuff, like
Mhm.
t-shirts. Smoke shop would kill it there if they don't have one already. That's kind of a no-brainer. Liquor store, like things like that you would, if you're staying in the hotel motel area and you don't want to go to Walmart, you just want to grab something really quickly, I could see that being useful. I don't know what else you'd put there. What do they have there now? Can you see in the photo? They have
It looks like a
Korean bar,
car
Pakistani
rental.
restaurant, next car. It's interesting because it looks like they don't have any of the things that I just listed.
No, they don't. And they got one. It looks like the one side is empty.
So this is what's there right now.
That's
So are they
bizarre.
saying the whole space is available? Like
I
the
think
whole-
so. That's what it looks like. It looks like they're selling, from the listing to me, it looks like you're selling the whole location. Like the whole real estate itself. I don't know if you're selling with the leases or not. Does it say if it's selling with the leases?
Doesn't specify, it seems.
Value add investment, flexible zoning, ample usage square footage, incredible accessibility. For an ideal 3-mile proximity to Disney, surrounding roadways, blah, 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 blah. Immense value add potential through lease.
10,000
%
square foot
lease, there it is.
freestanding.
15% of the property is leased, apparently.
So that it sounds like they're selling the whole building.
There definitely are, but
Yeah.
how is it only 15% leased?
Well, unless they're saying like out of the 3.11 acres, 15% of it is leased.
No, that's impossible. They've got to be saying from what they have up there. But I see this is a weird one. This is one I'd want to know more about.
You would have to ask for more information here, and luckily, Mr. Chris Smith is available at 407-541-4425. Not an ad. But
I'm saying
altogether,
yes.
What's your final opinion on this?
Absolutely. So long as, look, to own a piece of real estate in an area like this, no brainer. I don't even know what it's going to sell for. I think he's, if the starting bid is at 650 30 days ahead of time, they're probably expecting, multiple millions on something like that.
I would think so as well.
I want if there's like a cap or like a no sale clause built in, like if you don't sell, if he doesn't get the certain amount of money, if they won't sell it. I also wonder who's selling. There's a lot of questions. If it was $1.5 million, $2 million, give me. I would take it immediately.
The cool thing about that is you could literally get, for those of you who aren't familiar with SBA loans, and kind of reconnect here while we're talking about this, but for those of you who aren't familiar with SBA financing, they will actually finance up to $5 million, depending on whether you qualify, whether the opportunity qualifies, and that sort of thing. They will actually fund up to $5 million of a purchase price, and they actually prefer to see that there's real estate involved, because that allows them to be able to, use that real estate as collateral if something happens with the loan.
Yep.
So this is probably something that would work for that. That being said, when it's going to this kind of auction, I would guess that, they're going to be looking for a cash buyer that can act very quickly. What do you think?
There's so many question marks, right? Because like this is a real estate deal that they're posting on Buy Biz Sell, but they're acting like it's a value add opportunity. So do you buy the real estate and then you put yourself as the leasing manager? Do you hire a leasing management team? Do you need to like renovate the whole property? There's so many question marks on whether or not it's I don't even know if it's a business, it's a real estate conversation, honestly. If we're talking about real estate, do they care how that gets paid? I don't think they do. I think if you had a cash buyer come in and say, hey, we can close a lot faster, they would just take it off of here.
That's true.
You know what I mean? Like if I come in and say, hey, I got $1.5 million cash, do you want it? I think they'd pull it off. So I think if it stays on auction, go SBA, do whatever you got to do to get the money.
Yeah, it seems like they're doing it through one of their subsidiaries. 10X is another one of their sites.
Interesting. Yeah, typically you don't see stuff on here like this. So this was kind of an interesting find.
It's a cool one.
Altogether, if this is something that you were able to mobilize for, I think that's a great opportunity.
I would just knock everything out and turn the whole thing into a Chick-fil-A and be done. Just take all the spaces on the bottom out and say at least half of it to Chick-fil-A and the other half to Starbucks, and you're done for the rest of your life. I mean,
that's honestly true.
Right?
I see. Maybe it's just me, but I'm thinking more of a Popeyes Dunkin'.
There's nothing wrong with that.
Okay.
I'm 100% on board with you.
I much prefer the Popeyes.
The only thing is Popeyes, I don't know if you're getting the same rent. Chick-fil-A's paying.
I would rather have that Chick-fil-A and Starbucks rent, although Starbucks is having some trouble.
Yeah,
having
right.
Some financial trouble. So
I saw that.
I don't know. Maybe Foxtail Chick-fil-A.
Sure, we'll keep it local. Shout out Foxtail.
Yep.
Yeah, they need more locations. They got better coffee, anyways.
It's true. What else is catching you guys by?
The
next one.
Yeah, Ryan, go ahead, man.
Call
one out for us.
Oh.
Netflix, Hulu. Yeah.
I like,
you could buy Netflix. What would you do?
Oh man, fire everybody in the creative department because they're turning out trash right now.
We're going off the rails with the connection here, but
Netflix.
Oh man, wasn't there like a? No, let's keep going. Let's go to the next page. I don't want this page
pulled up. Okay.
Yeah, you go.
I want to bust our mic setup here.
Flooring. We've talked about flooring a couple times. Let's go. Yeah. He wants 1.8 and he's bringing in a little over $500,000. Okay, so that's like close to it's a little.
I got my old man eyes
3X.
on the little phone here.
We're back up.
Oh, we're back up. Okay.
Yeah. It just keeps disconnecting for no reason. But
He's
we'll
doing 2.4.
So we've got finally some solid cash flow to sink our teeth into and talk about. We have a 70-plus-year-old flooring store with $500,000 a year in cash flow, and they're asking $1.8 million for it. Multiple is a little bit high, not terrible, but it's a little bit high. I'm not seeing a lot of flexibility on the terms, at least not stated in here. What do you guys think about this so far?
Go ahead, Ryan. I feel like you got a little bit more to say on this area.
A 70-year-old company makes me happy because that signals almost assuredly retirement. And that seems like a very good chance of getting a deal with some sort of seller financing or extended buyout
Sure.
through a line.
Yeah.
They're already pushing the SBA, which means they're very confident this is going to be one of the business at least will be qualified. And I like that they have employees. I'd like to know what the basis of the employees are. Is that management, sales? I think they have a warehouse, they said. So like
Located in a beautiful new showroom.
So yeah, I'd like to know the composition
warehouse,
of that.
conference room, showrooms, offices,
And it's right down the street.
Interesting.
Does it say why he's selling?
It doesn't.
Was there any like reasoning for it?
No, and that's always a bit of a question mark for me when they don't include that. I personally don't like when they don't include that because it seems like something you just be transparent about. I think from the perspective of someone who's thinking about buying a business, you really want to know that because it has a lot to do with the future of the business.
Sure.
I like that he's given 3 months for a transition time included with it. That's good.
On that subject, when they were selling your business, did they give you much of a reason for it?
Yeah, I mean, yes. Of course, our situation was unique because we knew the owners more or less directly. So they were opening a new business. They had an opportunity that was going to be bigger and better in Vegas, and they were going to be using this to sort of help fund that new growth. And also, they were old enough that they wanted to get out of the business. So similar to what Ryan was suggesting about retirement, retail it's a young man's game. It's a lot. So to get out of it it was smart at their point. For something like this, the red flag for me is where's the line of descendancy? Like, who are you going to pass it to? Because if it's 70 years old, I can't see that being one generation's business, right? Because I mean, you'd have to have been average lifespan for a guy is like 75. You'd have to have been like 5-10 years old when you started the company. So I don't think that happened, right? So somebody started it, and then either it was an acquisition or it got passed down. So what happened now that we're getting out of it? Why is there nobody internally who wants to take it? Like, what's going on with the business?
70 years, you could even be talking about like the second generation of retirement.
That's what I mean. Yeah.
Yeah, it could be that someone started this when they were like 30. Ran it for 35 years, then passed it to their kids who ran it for another 35 years. And now the kids are looking to retire.
I also want to know if that cash flow was last year and they're just going off of 1 year.
We have a question as well.
What you laughing at, bud?
He just restated everything that you said. It sounded like it was new.
Brody?
Yeah.
Yeah, he's got a way of doing that. He'll recap me.
So we have a question.
But he recaps it in a good way, I feel like.
I just love hearing it. It's just like, oh, this is going to be it. And then, yep, there it is.
I don't know what it is about this episode. You guys think we're not live or something?
We're live. We're adding some spice, Brody. We're adding some spice to the viewership.
That's why we had Grant on.
Yeah, why else am I here?
We do have a question, though, so I'll keep us on the rails.
All right.
Someone said, Zane Frazier said, with businesses like this, how much thought do you give to the owner and their role? Honestly, the answer to your question, I would say, is with any business you would ever think about buying, you give all the thought to the owner and their role, because a business acquisition could live or die on what the owner's previous role is. Because, I mean, unless you particularly want to come in and be very, very busy and want it to be a job, if the owner is incredibly involved and they're not in the business anymore when you buy it, then you're buying a job. And like Grant was saying earlier with his acquisition, a hugely attractive piece was that they had a whole professional management team in place so that when he took it over, someone else could run the business. They had management in place to actually make sure the business was being run properly.
Yeah.
And it's honestly, I would just say it's very, very risky if you have an owner that the business is completely dependent on.
Yes. Yeah. So, Zane, first of all, awesome question. I think for a business like this, if that's what we're talking about, the big question mark to me is what was the role that he played? Because for something like this, for a flooring company, I'm assuming basically, because there's not a whole lot of information, I'm assuming because we're talking about retail and that's sort of the category that it's in, maybe they're not in the installation area of it. They're just actually selling the flooring and the pieces for it. So an owner of of a business like this, probably for it to have been as successful as it was a very good salesperson. Was probably a guy who knows how to work the local market, who has a great relationship with people coming in and out, who has met the family, who knows where the kids go to, for vacation or what teams they play on, whatever. Like they know, they got their fingers on the pulse of the area that they're in. And you could be buying the business and the people don't shop with you anymore because that person's no longer in position. So what you'd ideally want to do, Zane, is you'd want to see if you could buy a business like this with keeping the owner on, even if it's just a face, keep him on for 10, 15%, but let him still appear like he owns the business while you work on doing all the value add stuff underneath it so that his current customer base still feels bought in and feels like they've got a connection to the business still. And you can work on doing everything else. Because I think part of the proposition here was that they don't have a full sales force. I saw that when you scroll down to like value add opportunity or growth opportunity.
Yeah, I was going to say there's only 5 employees. To
Right.
me, that sounds a little bit small for there being a sales force.
That's what I'm getting at. Yeah. So to me, this screams that the guy and the people working next to him just know their industry in and out. They know their customer base. They know what types of, products to order. They know what's in popular demand. They know what's the right pricing. So I'd be really scared to buy this business and not keep him on.
Yeah.
So if he's getting out, running away, this is retirement, or his health is declining or something, you'd have to be really cautious about your transition plan. And you'd want to know all the different things that they did to get to that level. Like 3 months is not enough. They said a transition period, which would last over 3 months. I want at least 12,
Yeah. And that's a common theme we see on here all the time. Ryan and I mention this all the time, is that on Biz Buy Sell or other listing sites, they very often will put, a lot of times they even put 2 weeks. Like, yeah, we'll train you for 2 weeks.
It's crazy.
To take over an entire business, it's just not realistic at all. And by the way, you're welcome, Zaid. Fantastic question. Thank you for tuning in and giving that question. But I think 2 weeks, it's an absurd ask. Even a few months for most businesses,
it's crazy.
It doesn't make any sense
Yeah.
because you have to get to know a lot of new clientele.
Right.
You have to really, really like hand it over correctly if you wanted to continue right and actually fulfill on any financing that you did.
And what I feel like a lot of these people don't get in this conversation about like, okay, what like the short transition period is if I could run your business that quickly, like if you could sell it to me and I could take it over in 2 or 3 months, I'm not buying your business. I'm opening my own, or I'm expanding on what I'm already doing, and I'm crushing you. I'm killing you, right? If I can do it in such a short period, you know what I mean? If I'm doing it in such a short period of time,
real.
I don't need training, right? I've got it figured out. So if I'm coming in as a business owner or a potential owner, I want to do this through acquisition. You need to be teaching me from the ground up how to do everything. Otherwise, I'm already in your industry and I'm probably competing with you. So I feel like there's just like this out of touch thing when I read some of these, where it's like they don't get it. Like this is people who are coming to this to look for these companies are not in the sector already. Otherwise, they wouldn't be there. So
yeah. And for anyone who's tuning in who has a business, this is part of the reason we do this show, is like, hopefully you can think about this if you ever want to sell your business and realize this is how someone on the other end of a transaction thinks. This is the thought process that goes through their head. They're thinking about, what can this business do for me in the future? And how can I get as close to guaranteeing that as possible? Not, great job, let me reward you for all the hard work that you put in.
That's a great way of putting it.
Which is harsh, but true. And the more you can accept that and realize that and play into that, the more you can build a business that someone will want to buy.
Yeah. And
I've got another question too.
Sure.
So how much does a CFA help with the technicals in PE? Certified financial analyst?
Chartered financial analyst. I believe,
Chartered
yes.
financial analyst?
Right,
I'll let you take that because you're
Yeah,
I don't even know what we're talking about.
It's like a certification that you get in the financial space.
Okay.
It's the financer, more of a finance thing instead of a CPA. You go for a CFA.
Okay.
It's considered one of the most difficult certifications to get in finance, and it really does a lot to refine your analysis, your projections, you're learning finances at a level that even a master's probably wouldn't get you to, just because of the volume of work and the intensity of it. Having a 52% pass rate for the level 1 is in and of itself like a huge ask. So if you were looking to position yourself to get into a private equity firm, a CFA, or at least getting level 1 and saying you were a candidate for level 2 would be a tremendous way of getting the door as an analyst or a base portfolio manager or something in the portfolio field. You cannot go wrong by getting it, and a PE firm would most definitely be looking at you seriously for a number of analyst or entry-level roles that would be paying much more than normal because of that designation.
Now, that does bring me to an important point, which is the entrepreneur in me is telling me it would be great to either partner with or hire a CFA.
Yeah. What was the question specifically?
The question was how does getting a CFA help with the technicals in private equity?
Oh,
So
okay.
I think Ryan hit it on the head,
Yeah.
there, which is it helps with
Perfect.
the financial analysis of everything, because to be able to look at a company like we're looking at right now and see, okay, here's the cash flow state, here's the asking price. Those are the basics. Ultimately, you got to really dig into the real nitty gritty of it. What does it look like the last few years? What's the likelihood of that continuing? How does that change when you bring in some kind of financing? And I think having that certification, you would probably know a lot of the particulars of financial analysis that can help you get that full picture to be able to make a more informed decision versus just saying, oh, it looks like a fair market price. Does it actually work for your financing situation? That's the big question. I
Sure.
think it would help you answer.
Many of the CFAs I know are doing a lot of projection work and management work and doing wealth management in a sense. So they're also pulling data from outside sources and industries to cross-check with what they're doing. So, they have a Bloomberg terminal up in some of these places, or they'd have other business, they'd be tracking trends within business areas and how competitors are doing. So really that's an important one to have, or it's a really great designation to have if you're able to complete the whole thing, because you only get like 2 years or 3 years to complete it before they make you reset. The CFA is important. A CPA is very important as well, a very knowledgeable one. And a CIA or CRM, which is a certified, it's internal auditors. CIAs and CRM is certified risk manager, which you need the CIA to get the CRM designation. All three of those provide a different aspect that a PE firm would be very interested in working with, because they provide different levels of security in that investment, and also continued with risk management, continue understanding of the business, how it's moving. They all work together. So whichever one you choose to go to, you're going to be doing a lot for your resume and building a career in finance.
That was good stuff.
That was awesome.
I learned a lot there.
How important do you guys think it is to have acronyms in PE firms? Because I feel like everything is an acronym, it sounds like.
It depends what route you're going into it from, I would say. That's why I said, like, the entrepreneur in me leads me to want to hire someone.
No, of course.
Some of that stuff. I think it helps get you into certain doors.
Yeah.
And I think it's absolutely required for certain positions.
Oh, it's not a question at all. I guess I always joke about this in these industries, because it's like everyone has there's always some designation, some name behind it, and at a certain point, like your tagline, your email, it starts to look insane. You just have like 500 letters afterwards. I don't know what half of them mean. I haven't even heard of any of these positions that you're talking about. So CPA is the only one I know. And the one I'm afraid of is the IRS. So besides that, I'm good, Oh, yeah. But I think to answer his question, I think my limited perspective on it, I mean, these people need to be in any PE firm. You need the smart people who are going to be doing these types of analysts or analysis, and you need people who are going to be out there trying to create deals, have conversations, make things happen. So one hand feeds the other.
People, also just different type of.
No, we're stupid. No, people like me. That's we don't have that. So we need all the ABCs, BCFs, CDDs. We need all those people to make things happen for sure.
So back to this business that we were talking about, and great question, by the way. And good luck with what you're working on. I see you're working on some acquisitions yourself.
Oh,
so
awesome.
Good luck on that.
Yeah, that's cool.
And thank you for the question, Slappy Joker. Let's get into some more analysis.
See, I knew there was something. Slappy Joker. He gets me. He gets me. He understands it. She gets me, whoever it is.
So altogether, what would you guys grade this business deal from like A to an F?
What's the price again? 1.8?
Price is 1.8 million.
Gross revenue 2.4, FF&E 40K, 10 grand in inventory, 502,000 in cash flow.
With a warehouse.
Oh, and it owns the warehouse too?
I believe they have a warehouse they listed there.
And Slappy Joker said, my man.
My problem with giving this a high grade is that I don't trust the cash flow number. I feel like that's not an accurate cash flow number.
What makes you say that?
Because the margins on this in flooring, I'm not convinced that off of the 2.4 gross revenue that they're pulling 502. Like, I think it's, let me say it like this. I think it's a alluring number. I think it's something that's like, oh, wow, they're doing 500 grand in cash flow. I don't know how much of that is actually profit. I feel like that's just sort of like a line item. They're like, oh, this was operating revenue or whatever. I think they're confusing the two, because I don't think if the company's pulling $500,000 like that in profit, let's say, which is what we're looking for ultimately as, you know, people doing acquisitions, with 5 employees, you own the warehouse that's leased out as well as it is, and it's been established for 70 years. I'm not selling for 1.8. I'm selling for a lot more, even if that's the cash flow. I know that the numbers should say that I should, my evaluation should be different, but I think anybody who's in the operating position of that business would not sell it for that number. So I'm leery of it.
Do you think someone's going to pay more than that, though? That is above a 3 times multiple.
I think that in a space like this, where you're probably getting, again, we're talking retail, right? So most of the biggest fears for any of us in retail is being gobbled up by big chain stores, right? And so if these guys are competing at all against people like Home Depot and they're getting, you know, flooring out at these numbers, they've got some special sauce. So I'm leery of it. To answer your question, I'll give it a B minus.
That's pretty
That's
solid.
generous.
Yeah, I think it's there. I mean, I think there's something really interesting. I don't have enough information to give it a better grade. I'll say it like this: if it's truly these numbers and that's truly accurate and that's the profit, and he really wants to sell it for that number and there's no BS behind the curtains, I would pull that up to an A, because I don't feel like we're that far off.
Okay. See, I would actually say C plus and a B minus if all of that is true.
Okay.
Or a flat B, I'll say, if all of that is the case.
Just because the asking
The
price.
reason I say that is the asking price, in my opinion, actually, it's not too high. It's a little higher than you would expect at that level, because there's not that much inventory or FF&E either. There's literally a combined between FF&E and inventory. It's 50K.
Yeah.
It's, when you're talking about the entire asking price, it's almost like inconsequential there.
Sure. Yeah.
The other big thing that I knocked it off for points on is not having a sales force in place. The fact that they said adding a sales force would bring in more work tells me that that it's dependent on the owner.
Sure.
That the sales are dependent on the owner. So
Yeah.
I'd be very scared to acquire that if that's the case, because that special sauce that you mentioned, that they seem like they have, might be that the owner has just got it like that.
Yeah.
And if you don't have them anymore, then that could be rough. All that being said, there's enough cash flow to potentially bring in some really rock star salespeople. And I think in the flooring space, there's probably a lot of really good, strong salespeople that have been in it for a long time.
Well, and devil's advocate there is, if they're doing those numbers without online ads and a good sales force, you know what I mean?
And talk a little bit about that too, because we've talked a lot about like your general business experience. We haven't talked as much about like the sales and marketing expertise, which for the audience watching and listening, that's really Grant's special sauce as a business owner, is the sales and marketing side of things.
Yeah. So, I mean,
and I would say talk specifically about like how that could be an opportunity for a business acquisition and maybe how you've seen that play out with yours too.
Sure. Yeah. So I think, most people who are going into business fall in one of two categories, right? They're either great salespeople. They have the gift of gab. They know how to talk. They really don't know a whole lot about business behind closed doors. They learn as they go. And some of the most successful entrepreneurs I know have had that experience. They didn't know anything about business, but they knew how to talk to folks and they figured everything else out later. Then the other half is people who are terrified of selling, right? And that presents its own obstacles and also can be really beneficial, because if you're not that person, but you have really great fundamentals and understanding of how business should work, you're able to look at deals like this more black and white. For a guy like me, I see an opportunity, because if I look at that and I say, you're doing $2.5 million gross revenue and you have 5 people, and you're post, you know, one of your options about growth here is adding a sales force or growing online ads. It says to me, like you suggested, like we suggested, that there's probably 1 or 2 key people in there who didn't know how to copy and paste themselves. And the key to being a great sales operator or sales leader in the force is being able to disseminate that information to others and then build a team underneath you. Like you look at the guys who are, all over the place on Instagram these days, like Andy Elliott, who's really, really good at amping up this huge group of people, this huge team of just mini-me's, people who just copy paste exactly his style. And they've been able to grow and scale tremendously fast through that process, right? So for an industry like this, or for a business like this, I look at it and say, if I could come in and train 10 guys to sell flooring 40% as well as this guy, as the owner, then the numbers are going to explode. And then I could potentially even start doing additional locations, or hell, go door to door, or start cross marketing or partnering with other businesses. It's like, I think the salesman's mindset is always, how do I get other people to do this for me? As opposed to just like, how can I just do this business at a high level? If that makes sense. So I think for me, I look at it and say, how could I get more people involved? How could I build a big sales force with this? And then what is the potential for that sales force with a product like this that's already doing good numbers without a good sales team? It's almost like if you told me there was a car dealership doing $2.5 million in sales and they had 2 sales guys. You know what I mean? I would just be like, there's tons of big name car dealerships out there. Same thing like flooring. There's a ton of big box stores that do flooring. They figured something out. So it would just be copy and pasting that thing that's working from the ownership side. And that can be daunting for business owners also, or people who are trying to first get into acquisitions, because they don't know how they would start that process. But that's something I think that you're really good at, is just coming to people and businesses and seeing what's worked for them and sort of like synthesizing it down to like the smallest components and saying, oh, this is what's working for this guy, and that's what's working for this business. You know what I mean? So if you have that skill set and you can hire a guy like me to come and start building people up, you could do incredibly well with this.
Yeah, it's kind of just like, what are they doing really well at, and how can we just do as much of that as humanly possible?
Exactly.
And if there's a reason we can't do more of that, what's that reason, and how do we fix that? How do we get past that reason?
100%.
I think you hit the nail on the head there. Do you guys want to look at one more?
Yeah, please
do it. So we've looked at flooring. We've looked at miscellaneous auction real estate spaces. We've looked at, I forget what the first thing we looked at was. It was something crazy.
It was just no numbers.
$5 million purchase. We got some other stuff.
Don't you or someone else has jewelry stores in the family, right?
Yes, my uncle.
It's you. Yeah. Why don't we look at this top-rated beachside jewelry store?
Let's do it.
Prime location and stellar reviews.
Oh, it's in Sarasota.
That's good, right?
Well,
or you're thinking post hurricane? When was it listed?
Fire sale.
Too soon.
Well, we got to be
too soon. Right?
I'm saying we got to be careful.
I don't think this was put up yesterday.
Well, okay, so not to be crude here, but if it was listed before and then maybe something happened, now you make a call now and say, hey, I know you had it listed for $595. How's Milton treating you? Has Milton been good or bad for you? And why don't we have a conversation? I'm sure you're not number one on TripAdvisor anymore.
Oh my God, this is taking a dark turn. On a real note, for anyone who had trouble in Sarasota.
No, come on, guys. Okay. Listen, our hearts and souls go out to you guys. Okay, we're talking about business here. All right. Businesses get smacked. That's the nature of doing business. You're in Sarasota. You were the number one place to live and number one destination in the USA. That's why it was all over the news. They didn't say it for no reason.
This is the first time I've ever heard of Sarasota. I'll be honest with you.
This is the first time you ever heard of Sarasota?
Yeah.
We got to take you out some, bro.
We have a message from
Jackson
Grant's
close.
wife that says, make sure he knows his wife said hi.
Oh, okay. Hey, babe.
We also have another question, which is, what if the CEO's salary is part of the cash flow? And that's a great question.
Great question.
A lot of people don't think about that. For these smaller businesses that we're looking at, when it's going off of cash flow, a lot of times the owner, like, that's something to look for, because a lot of times the owner will add their cash flow back into the business. And they'll basically, like, if the net profit of the business, for example, was like $200,000 a year, and they're taking another $100,000 for their salary, they might try to add it back into the cash flow. So you've got to look for that and be able to spot that and understand, is this cash flow that they're showing the actual cash flow that would be the case if the owner was out? Because if you do have to replace them, then it's not actually cash flow.
Sure.
Much.
Yeah.
If it's a bigger business going by EBITDA, that's another story. A lot of times there is like a manager or operator or CEO, even they might call it, that's been installed that's part of that calculation, and the EBITDA is showing after paying them. But it's something you need to dig into and look into a little bit more closely to really understand the full picture.
Yeah, I agree. I think normally you would like denote those things. You wouldn't put it as cash flow if not, right? They would call it, have you seen it?
It's the Wild West when you're listing businesses, to be honest. Like there's there are rules and regulations, but there's so many things to consider. Like I've seen people put cash flow where it's not factoring it in. I've seen people put it where it is factoring it in. So that's why you've got to be savvy financially and like really dig into those things before you just take it at face value too.
Yeah, I think on the business we looked at earlier, which is what I'm guessing the question was arising from, like the 500K cash flow. If I think really it works to your advantage either way, because if it's including the owner's salary, then you're essentially buying a business where you can pay yourself more or less the same salary out of the gates. So that's good. So you're not buying a job. And if you are buying a job, then at least you're getting paid for it. Mm-hmm. And if it's not, if it's been, if it's been removed from it, then there's probably more money sitting on top of the deal. So in situations like that, it's a win-win. I think it's more of a question mark when you're dealing with really low cash flow. If you have cash flow like around 100K, 150K, 200K, you have to ask yourself that question, because most business owners aren't going to pay themselves less than $60,000 a year, regardless of the business, just because that's the median earnings these days anyways. So I think larger cash flow, probably not that big of a deal. Lower cash flow, maybe be more concerned, right?
Yeah, and a lot of times just out of virtue of the business being smaller, if it does have lower cash flow, you're going to have to take a more active role in the business, most likely.
Right.
So what do we think about this jewelry store? This is a pretty decent deal we're looking at. It's just a little bit over a 2x multiple. I bet a 2.5 actually, I would say. But they have a lot of inventory. That's the first thing that jumped out.
Oh wow, yeah,
yeah. The inventory, and for jewelry, that's a big deal.
Is it?
Like the inventory that they have, assuming they aren't marking that inventory up dramatically, which it might be.
Sure.
But if they're not marking it up dramatically, if there's still margin to be had there, that's a pretty big deal, because your inventory is a lot of your business.
That's the whole business, more or less, right? I mean,
the employees as well, I would say, but like it's what you're selling.
Right.
So I would say that's pretty important. So that is a significant amount of inventory. The FF&E isn't a terribly high number, but for how much inventory is there and what the cash flow is, this is a pretty good deal in my opinion.
I wonder how the FF&E is so low, because normally I think jewelry store, I think of like that's
cases.
Yeah, that's where you spend most of your money is on the visuals, right?
Yeah, it must be a really small one.
Sure.
It must be a really, really small one now that I think about it.
Yeah, that would make sense. Like tiny square footage,
like not a ton of cases.
There we go. We got the reason to sell right there.
I love that. I'm so glad that someone actually put that in a thing finally, that it's like a health concern. Yeah, it says like the husband and wife.
Scroll up. Stop.
Wife has, or somebody has health problems, looking to transition to a new stage of life, and they're looking for the right person to continue the legacy, someone who wants a beachy and enjoyable business, someone who is ready to take the business to the next level through marketing and online promotion. Great. So we know, right? We know it's a health concern. We know why you're trying to get out of the company. So you're looking for, some retirement money, some mailbox money. I love deals like this personally, because since you know what's happening, you can construct your offer in a way that makes a lot of sense for the family. Mm-hmm. So it's a win-win, because if you look at this deal and you say, hey, $500,000 is too much for me based off of this, what's the goal? Well, having some health problems, need some mailbox money. We're not going to be working this full time anymore. Okay. What do you need? You need $8,000 a month. You need $10,000 a month. What is it that you need to be, happy with your family and have everything set? You can construct your deal then and say, hey, I got $100,000 cash. We'll owner finance the other 400 over the course of the next 5 years. We'll, keep you in at 20% of profits. Like you can sort of build that deal that works for both of you and lets you get your foot in the door with this without totally throwing money or leveraging a bunch of SBA debt. Because I know we talk about SBA debt like it's, free money, but a lot of times this SBA stuff is secured for a lot of folks on their home or another business or their stock portfolio or some asset that they have. And if you buy a business and it goes south, you're on the hook for it. So owner financing is much better, because worst case scenario, you're able to just pass it back to the owner and you're out your initial investment. So I love knowing what's happening, because now we can have a conversation about how to structure the offer.
Yeah, I think that's really smart. And it begs the question, what kinds of flexible angles are there in any deal you might be looking at? And have you thought through all scenarios? Like if you're looking at a business, what angles might there be where, and Ryan, this is something we learned in our negotiation class. Like the biggest key to a negotiation is what Grant was hinting at there, is figuring out what the underlying hidden things are below the surface that someone hopes to get out of the deal that they might not even realize is like a primary thing that could help you on your side, and just getting those all to the surface and figuring out what you can do. It might seem like there's no deal to be had if you're looking at it from one angle, and you might be able to find one little thing that you could add in for them that makes a whole different story. We have another question, by the way, too. We have 2 questions. Slappy Joker is saying, is this website limited to the States? Actually, I'm not sure. I've actually never looked outside of the States.
No, I think it does other countries.
I think
or there's other sites that at least do other countries too.
And I know some of the more online brokerage sites for like online websites, things like that, are worldwide. I'm not 100% sure, but I'm sure you can still look into other ones. I want to say we looked at a Canadian one time.
Yeah, we did.
Yeah, it was a Canadian oyster farm we looked at.
I remember that episode.
Yeah, so I believe there are out of states options. We have another question as well. Does inventory mean the value they bought the inventory for, or the projected income?
We don't know.
If you sell the whole inventory.
Yeah.
It's a great question.
We don't know.
Yeah, tell them why it's a great question.
You don't know, and you won't know unless you go to the offer table, you sign all the NDAs and everything, and then you have someone come and audit it and do their own valuation, which is what you should do in this situation. Really, in any business where you don't know the actual cost of goods, I would highly recommend having somebody who's qualified to audit the products, because if you're not a jewelry guy and you're looking to buy a jewelry place, yes, that 225 could be them trying to make a little bit of extra money on the way out the door. Like they bought it for $100,000, they want to make one key on it and say, it's 225. If you don't know any better, then you might say, okay, well, this 225's got to be worth 750, right? You really don't have any idea unless you're in the game or you're going to have someone do that for you, because it could be either way. You could have that be the actual value now, or it could be their marked up version. I'm going to guess, just because I know how most people do these things, that it's a slightly marked up version. Maybe it's not as dramatic as I'm saying. Maybe it's worth 200 and they're asking 225. They just want to make something on it because it's sitting there. But I would be very careful with a business that has that much inventory that you don't know cost of goods.
And when the whole business is the markup of the inventory, well, any business with inventory, that's the case, except if it's like inventory that they're not actively selling or something that you might be considering later, or if you're marking up a different way or something.
Yep.
But like, especially with a business like this, the whole markup of the inventory is what you're going to live or die on. So if you're buying it for what you would be selling it for,
sure,
it's going to be a huge problem. It changes whether you got a good deal on the business in the first place or not. So I think in this case, you could ask them, did they have someone professionally appraise the jewelry? And do they have any way to
have the documentation,
show that by a third party?
The other way around that, if I'm thinking constructively here, would be to structure the deal, the buyout, with the current inventory being sold through on cycle first. Mm-hmm. So I would say, hey, look, this is the inventory you guys have on hand. You claim it's worth 225. No worries. We're going to put that to the side. So what are you actually asking for the business? You're asking, I think it was 500 and something. So you're asking 225. So let's talk about that. And then we'll work together on selling through your inventory. Because if they truly believe that's what it's worth and that's what the value they want to hold it for, I don't mind playing by your numbers. I just want my terms. Because I don't want to buy 250 grand worth of inventory out of the gates. And if they push back on that, then my pushback would be, you keep the inventory. I'll buy the store and flush my own money into it. So you have ways to be creative with that conversation, and you, without even having to necessarily hire someone, you could probably fish out whether or not they're being genuine by asking those types of questions and seeing what they're open to. Because they're like, no, you have to buy with the inventory at this number. It's like, okay, well then we have to get it evaluated.
Mm-hmm. So I think that's smart. Just put it on them to kind of like show the confidence in the value.
Yeah, burden of proof is on you, not on me. Mm-hmm. So.
And I think there's a lot of ways you can do that with a deal. Like with any questions that you have, you should never just go blindly into the deal with big questions unanswered like that. You should aim to put that burden of proof on whoever's selling it.
100%.
You know, you don't want to just jump blindly into it and buy it without understanding the true value of it.
Yep.
Because then you could be setting yourself up for a problem, whether you're financing it, whether you're just looking to grow it and have a good margin and a good salary for yourself, whatever your goal is. Getting to the end of things here, what do you guys think is the main takeaway we got from today?
That retail businesses, especially that are being marketed on here, are such a wide gamut of what you potentially could be looking at is whether or not it's a real business or not. I mean, I think we talk about this a lot, that most of your best deals are not going to be on this website or on websites like this. So to Slappy Joker, who was asking earlier, this is like something that's, worldwide. Maybe not, but Facebook is, right? And places like that is where you've had a lot of luck in conversations with business owners. That's where a lot of people find deals like this. So
I'm so sad right now. My favorite Facebook group for deals is paused.
Oh, no.
For like maintenance or something.
Oh, that sucks. Yeah. But I would say, I think in this space that we're talking about right now, the biggest takeaway is that the numbers are sort of up and down and you're not really sure what you're looking at. So I think getting a better view of the business as a whole, if you're considering going down this route, is important. And I'll just leave with this because I know we're short on time here. But for retail, I think the most important thing, I wanted to talk about this early on, but we lost track, was understanding the labor market and who you're trying to get to work for you. If you don't have really great understanding of how to build culture, how to attract and hire talent, how to maintain that talent in a retail space, you're going to struggle in 2024. You're going to need to, at the very least, if you're not good with that, have a hybrid approach to your business model where you have a lot of e-commerce, a lot of online sales coming through. So that way you're able to pour money towards marketing dollars and not towards hiring and training. If that's not an option, if it's not viable, like something like this with jewelry, maybe it's not going to be too easy to do luxury jewelry online with the competition in the space, then you need to know how to hire, train, and recruit well. And if you don't do that, don't do it, or hire someone to do it for you. So
it's good stuff.
Yeah.
And if you guys are paying attention, we'll be recording a double feature tonight. The next episode will be aired next Tuesday night at 6 p.m. Eastern Standard Time, also with myself, Ryan, and Grant. And we're going to be doing a deep dive on the labor market.
Sweet.
So stay tuned for that. That one will be airing next week, 6 p.m. Eastern Standard Time. And for any episode, we do them every week at that same time. Grant, where can the audience find you?
Probably on the street somewhere, just like asking for money.
That's what we found.
Yeah, I mean, yeah, in front of a Dunkin' Donut. No, I'm joking.
We found him on Orange Blossom Trail.
Not on OBT. On Instagram, it's ask_Uncle Biz. You can find the business that we run is breatheoxygenbar.com. And then the new products that we're pushing these days is called Glow Pulse. So glowpulsered.com. You can check us out on there as well. We have stores in Las Vegas, in the Venetian Casino, and we're here in Orlando at the Icon Park.
Awesome. And Ryan, where can they find you?
Find me on LinkedIn, Ryan Center. Just send me a note when you request me, and we'll start chatting.
And you can find me on pretty much any platform out there, YouTube, Facebook, and LinkedIn, where I do the live stream, and now mostly Instagram as well. Find me on Instagram, TikTok, any of them that I didn't mention. Same thing, send me a note if you have any questions that you want to cover on the show, if you have any industries you want us to dive into, or if you're a deal maker yourself and you want to potentially come on the show and talk about these types of things like Grant did today and like he's going to on the next one, let us know, and we would love to have you on sometime. Thanks for tuning in. This has been Deal Flow Live, and we'll see you on the next one.